it gets late early out there. So which basically implied there were like shadows out there because the sun was setting,
Mm-hmm.
It was really funny line, but I think that's a great line about Bitcoin. It's going to get late early.
Mm-hmm.
Okay. And so what do I mean by that? Meaning you and I are going to wake up one day, Bitcoin's at 100,000. We're like, okay, what just happened? And there'll be 7 or 8 institutions that have said, you know what? I'm capitulating. I've got to own this. As a result of which there's not a lot of supply. The supply is restricted. And the next thing you know, the price is up a lot. And it will have gotten late in terms of adoption early. Money likes cowardice. Money is a coward. And what do I mean by that? Money goes to where there's the least amount of risk. Mm-hmm. Money goes into the United States because it's the safest legal system. It's the most liquid. It's the deepest capital market. And so we like predictability. And if Trump is talking about potentially pulling out of NATO or ending the independence of the Fed, which he frankly has talked about, that would be cataclysmic for the overall economy. He may be putting pro-Bitcoin people in place, but if he's taking away the Fed independence or he's locking in to 100 or 200% tariffs, I mean, he said that John Deere, who's already moved stuff into Mexico pursuant to NAFTA, we're going to tariff you 200%. It would cripple the economy, and it would be a form of regressive taxation. So to me, I am very pro Bitcoin, very pro technological growth, blockchain, et cetera. I want to get there in a bipartisan way. I don't want to make it overly political, but I'm also an American. So whoever wins wins. I'm not a sore loser. Trump wins, God bless. I certainly want him to be successful. He's going to be your and my president if he wins. Same thing with Harris. I tell people who, they see, here's the other thing. We see these things sometimes as so binary, and we see these things as cataclysmic. I don't agree with Elon Musk that this is the last election if Harris wins any more than I would agree that it's the last election if Trump wins. The system is pretty sound. We'll be able to protect the system.
People still just look at Bitcoin as it's so risky. It's potentially a scam. There are scam artists involved. How do you tackle people that you approach and that come to you feeling like they can't trust Bitcoin and the people that work in the space?
Well, it's a great question. And so I'm going to simplify the answer cheekily and say BlackRock, and then BlackRock. And then if you want, I'll add Fidelity, and Fidelity. And my point being is that these are the largest asset managers in the world. They have embraced this technology. They've embraced this asset, and they've put their full faith behind these things, and they're out there marketing. I mean, of course, BlackRock has the largest, most successful ETF launch in their history, which is their Bitcoin Cash ETF. And so I would say that. And then the second thing I would say, which I think is important, is you have to understand it. You have to spend time on it. So I am in the process of writing a book right now. It's at the publisher now.
Oh.
And it's called The Little Book of Bitcoin, what Wall Street already knows that you need to find out. Huh. And Michael Saylor wrote the introduction for me, wrote the foreword. And it's a 200-page book that if you read the book, it's a primer on Bitcoin. It's a primer on the blockchain. And it's a message. And I've interviewed everybody, whether it was Robbie Mitchnick or people at Fidelity, people at Franklin Templeton, just why people should think about this technology, why people should embrace the technology, and why it is a hard asset. Because at first glance, you're like, well, this is a bunch of computer code. Why should that be worth anything? But then if you understand the technology of money and you understand what gold actually represents in our society, what its use case is and what its market value is, which is way off from what its use case is, why is that? Well, we see it as a hard asset. And so the question is, can there be a digital hard asset? And so if you have something that is immutable, and is fully decentralized and is fully distributed, Can that be representative of a hard asset? And if you study the history of money, Natalie, the answer to that question is yes. And so I spend 200 pages, a small book. It's about that big. It looks like a little contact book. And it's part of the John Wiley Little Book series. And it's coming out in December. And what I would tell people, the more you learn about Bitcoin, the closer and more bullish you get. I have yet to find somebody that said, I spent 6 months learning about Bitcoin. I did a deep dive. Mm-hmm. I talked to all these different authors, all these different analysts. I went to NYDIG. I went to Galaxy. I talked to Natalie Brunel. I talked to Michael Saylor. I've done 6 months of deep dive research, and I hate Bitcoin.
Right.
I've yet to meet one person to do that. Everybody that does that says, okay, I understand this. I have to own some of this. And Bitcoin is like tacos. Okay, you can't have just one, Natalie. Okay, once you go dig yourself into the taco chip bowl, you're gonna have more than one.
That's right.
That's what's going on. I wanna legitimize aspects of that. I do understand that Bitcoin is for the people, and that Bitcoin is a libertarian concept, and Bitcoin is actually, it's sort of, have you ever heard of the group Moms Against Drunk Driving? Okay, so Bitcoiners, it should be bad. Bitcoiners against the drunk driving of central bankers. Okay, so I sort of feel like the central banking community has been drunk driving with our fiat currency, and they've wrecked it. You took $35 an ounce in 1971. It's $2,600 an ounce today. Our purchasing power. It's crazy, but I mean, these numbers are accurate. $2 of 1971 dollars are worth $100 today. Okay. In terms of, purchasing power. And so we've destroyed the money, and they're drunk drivers. So when you look at Bitcoin, you see this libertarian concept, power to the people, can't trust centralization, but what we could trust is a decentralized hard asset that nobody can manipulate. And so you want it to be that. So when you say BlackRock and they're going to centralize it, or Fidelity and they're going to buy it and put it in an ETF, some of, frankly, the legendary Michael Saylor, who should be known as Michael the Great One, okay, who's done so much for the industry. Some people have accused him of that. They say, he owns as much as BlackRock owns at this point, and there'll be great centralization. But I respect the view. I don't want to poo-poo the view, but I would say step back, look at it from several 100,000 feet, look at it from a satellite picture. The Saylors and the Fidelities and the BlackRocks of the world, if they own $50 billion of Bitcoin, and Bitcoin is an asset class, Natalie, if you accept what I believe, that Bitcoin is an asset class, well, then Bitcoin should be a 15, 16, 20 trillion dollar asset class. Gold is a $17 trillion asset class today. So therefore, they're not going to eat up the asset class. They'll be a component of it. There's large stores of gold by central banks. There's large stores of gold, frankly, from institutions. There's a gold ETF, GLD, that you can store gold. Okay, but it hasn't really overly impacted the marketplace for gold. And I think that the same thing is true for Bitcoin. It's just that we're here at this very early stage, only 5% adoption. So we're sitting around thinking, okay, this could cannibalize us, but I wouldn't overly worry about it. I think it's legitimate to look at, but I think you have to look at where the potential size and scope is of the market, and then you can see that argument's not going to hold up.
I mean, where do you see Bitcoin going? How much can it actually capture, and why wouldn't it grow to, say, a $200 trillion asset class like some of these other asset classes?
So this is where you got to bring Saylor on, right? Because he's talking about it being 7% of the world's market capitalization, which would imply a $13 million per coin price for Bitcoin. He thinks you can get there in 10 years. And so
do you?
When I see, the problem is, I guess I'm like more conservative than him. He's a lot smarter than me, but I'm more conservative than him. So he gets mad at me when I say, well, Bitcoin could be I'll tell you a funny story related to my book. I finished the book by saying, so that's my case for Bitcoin. You should go out and buy 1 to 3% of your assets. So Michael says to me, well, how much do you own? 55% of my net worth is tied up in Bitcoin. And he says,
Wow.
well, yeah, some of it is just not selling anything, Natalie. If you catch something and it goes 10 to 1,
Grows.
Right? Let's say you have, let's say you bought 15%, it goes 10 to 1, and your other assets are growing. But guess what happens? Bitcoin becomes a bigger part of your pie, right? And I haven't sold any Bitcoin, thank God, knock on wood. But so Michael says to me, well, what are your assets? Well, I'm 55%. Well, why are you telling people to have 2%? If you're 55%, why are you telling people? Moreover, let me say this to you. If you tell somebody to own 2% of Bitcoin, that means they have to come up with 50 other ideas as good as Bitcoin, right? So let me ask you, Anthony, do you have 50 other ideas in your mind as good as Bitcoin? No, I don't. Well, then what the hell are we putting 2% at the end of this book? So I had to go back to the publisher. I had to rewrite the back part of the book.
Oh, you did?
I did. I rewrote it. I said, okay, listen, some people are recommending 1 to 2%. I personally have a lot more than that. I don't know if I gave them the exact number I'm giving on your podcast.
Wow.
But I said, the truth be told, this is one of the big ideas. And so you may want to think about owning more than the requisite number, and be a little bit more concentrated in Bitcoin. So for me, I'm wildly bullish long term. I'm not worried about the concentration issues because we have some ETFs right now. I think the ETFs, again, from a historical perspective, will have provided a catalyst for further adoption. Mm-hmm. The state of Wisconsin bought $150 million worth of Bitcoin a few months back. Maybe it was 4 or 5 months ago. And, the thinking behind that is, hey, there's going to be a portfolio asset allocation mix that's going to include Bitcoin someday. Someone's going to say, Natalie, you're a fund manager? Yes, I am. Okay. How do we judge you? Well, we're going to judge you by stocks, bonds, alternative investments, hedge funds, gold, and there'll be a small sliver for Bitcoin. And so the state of Wisconsin is saying, if I'm not long Bitcoin, I'm short Bitcoin. That's coming. Why don't I start buying it now before the wave comes? It gets late early out there. So which basically implied there were like shadows out there because the sun was setting, It was really funny line, but I think that's a great line about Bitcoin. It's going to get late early. Okay. And so what do I mean by that? Meaning you and I are going to wake up one day, Bitcoin's at 100,000. And we're like, okay, what just happened? And there'll be 7 or 8 institutions that have said, you know what? I'm capitulating. I've got to own this. As a result of which there's not a lot of supply. The supply is restricted. And the next thing you know, the price is up a lot. And it will have gotten late in terms of adoption early. It's going to get late early in Bitcoin, like Yogi said about left field.
I would argue that Wall Street has gotten as big and powerful as it has because of the money printing apparatus, because liquidity drives everything. And the closer you are to the money printer, which the Wall Street banks are, the better off you are. And it has really hurt downstream the middle class and the working class. So if Bitcoin is a tool for the working class, how do you envision the future of Bitcoin if all these institutions gobble it up and drive up the price? Does the rising tide lift all boats truly and maybe equalize things a little bit more? Because I want a meritocracy. I want it where the average person has a shot and they're not up against all of these monopolies that they can't compete and small businesses get crushed or taken over. Like, how do we make it so that our future looks more like the America that was envisioned, where it's about competition and value and, the cream really rising to the top, not just the people closest to the money printer?
I would like to see a deeper well of ownership in Bitcoin. And I would say this to you, and perhaps you would agree with me or perhaps you wouldn't, even if those people had to buy it through the ETF. So even if there were people that are in the middle class, lower middle class, that were buying $100 of Bitcoin a month or $100 a quarter, and they were, the only way they could really access it is through the ETF. And even though it has some detriment in terms of centralization, who cares? At least people now are building something, I was giving flack about Bitcoin being 63,000 3 years later, but your dollar is 68 cents.
Right.
So you lost 32% of your purchasing power. You see what I mean?
Yeah.
So Bitcoin didn't lose any of that. It's still right there. You see
Right.
what I mean? And so what I would say to you is, again, I don't know the answer. That's why I'm being so cautious, but I would say this to you. I would say we have to push this. This is something that Wall Street will help with, but we have to push the idea that it's a diversifier and it's a hard asset. And if you are an hourly worker like my dad was, you're losing to the man.
Right.
Because the man owns assets and you don't. And Bitcoin is a way for you to get a piece of the action.
Right.
And again, it's broken up into 100 million Satoshis per coin. Just start buying some Satoshis.